everyone, this is a trader and investor, and today is Labor Day in the US. The markets were closed today, Monday, Labor Day 2021, September 6th. And so this video is really going to focus on what do we do tomorrow morning as the markets open for this shortened week, Tuesday through Friday trading. What do we do? How do we prepare? What are the things that we are looking for? That's what I want to focus on, and specifically on SPYs, but we'll touch briefly on the Qs, IWM, and the diamonds. So for the SPYs, I'm starting with the daily chart, and the purpose of this is what is the overall trend and where are we in relation to the trend? Are we at an area of value? So an area of value in this trend means when price comes down and tests the trend line. So right now, this is kind of on its way down there potentially, but we don't know. We don't know because price could drive up there before it comes down here. So because we don't know that, we are not trading based on what we speculate. We trade based on what the charts give us. So in terms of an area of value, the first thing we look at on the daily, there is no area of value to look at. Now, if we look at any oscillators that you want to have, and if you look at the long term, the oscillator is pointing down, even though from way back here, price is continuing to make its way up. So this is on a daily. And I want to just switch momentarily here again to the 1 hour chart and show you that same divergence. Price and oscillator are not in alignment, right? They're not in alignment. Even if you look at this piece, they are not in alignment, this piece here. So until we have an alignment here, and alignment doesn't mean from this date here way back here. It just means at some point the oscillator fixes itself and there's alignment, there's a convergence, not a divergence, right? So until we have that, we're very cautious. So that's why I wanted to take a look at the hourly and show you that we have the same problem. So now as we look for an area of value, right now on the daily chart, we're not seeing it there. Of course, I always look at the weekly and monthly charts, but that's already something that we've known for the last, few months now, that we're in a strong uptrend, very, very strong uptrend. So in that strong uptrend and the weekly and the monthly being aligned, on the daily, I'm just looking for a potential area of value for an entry. So then, this is where the hourly chart comes into the picture. We've seen this divergence, meaning that we're expecting some sort of a pullback. And as you can see, when we had this, right, when we had this divergence, even though price was making its way up, we had a very short-lived pullback. It tested itself, made a double bottom, and went back up. So that's a good indication. Now, here's what I talked about earlier about alignment. After this, price went up, and at this point, oscillator went up. We have alignment, we have convergence, right? So both of them, from that divergence going opposite direction, they started going into the same direction. So we have this here, and so price kept driving up. Again, we always look at bigger picture. So when we look at the bigger picture, we still have this long-term divergence because this hasn't really come clean. It hasn't come clean because let me remove these drawings. Price has continued to drive up, but from that point on, it is not driving up. We aligned here, we aligned here and we immediately misaligned, right? That divergence, that misalignment is saying, hey, there's still some room for downside before price reverses back up to the upside. And ideally, right, ideally we have a deep pullback to an area of value that aligns multiple things together, multiple things, confluence with what? We have an hourly demand zone, we have an imbalance, we have a trend line that we drew from the weekly, daily time frame. So all the three and price coming together at this point, this is confluence. Now, if you look at this chart, any down is going to come down here. So will it cover? So from here to here, this whole area, I don't see a confluence, right? Because this trend line is moving away from that area, but it's getting close enough, right? So if we get to this area, preferably past the trend line to the imbalance of the 1 hour time frame, this is where I'm very comfortable on the long-term position. But we trade what we see, not what we want to see. So if price is only coming down to this demand zone, we take it. Are we comfortable taking that? It's always a good question. The reason I'm mentioning that is we look at, you know, what kind of a pullback are we having from these highs. This demand zone is only a 23.6% retracement. Is that something I'm willing to take? That's to be seen, right? So I took it here, I didn't take it here. So will I take it again here? When I took it here, it was against my rule, right? It just happened to work out. I got lucky. When I say lucky, it means that a trade against my rule worked out anyway. And if a trade with my rules doesn't work out, it's not a luck thing, right? It's because I'm not expecting it to work out all the time. But when I break my rules, I'm actually expecting it not to work out most of the time. So you get a break there and it works out. So here, when it comes down here, I don't believe I will take a trade here and risk a position because the pullback is not deep enough. Now, if price continues to drive up and this becomes something more interesting, we shall see. And as this price goes higher and higher, will the Fibonacci retracement come all the way from down there, or will it come from up here? When I don't see a deep enough pullback, I don't like to take this here. If it had done at least a 38.2% retracement from here, if price had come down here, so from this high, if it had come down to this level, then because we had a deep enough pullback, I will take the new retracement from that swing point. Right now, I'm not seeing enough of a pullback. Now, this is a matter of preference. This is how I draw my Fibonacci retracement. That's a matter of preference. So if you prefer and say, hey, any pullback, I don't care how deep, any pullback is good enough for me, and I'm taking it from that swing point, whichever one you consider the swing point. After that pullback is a swing point, I'm taking it. Then you can say, hey, if price comes down to this demand zone, it's coming down to 50%, I'm taking it. It's a matter of preference. But for me, that's not there. This pullback is not deep enough. Therefore, my Fib retracement continues. I might miss some trades. That's okay. But I'll get some the best of the best trades when price comes down here. Price comes down here to 38.2% retracement. Price comes down here to the 50% retracement, confluence with the trend line, or it gets past it momentarily, some manipulation, and I take this trade. Beautiful setup. I will take this trade. So really, the goal of today's discussion is how do you prepare for tomorrow? What are some of the things you look at? Right. So I'm looking at an area of value 1, area of value 2, because this is hourly demand zones, and area of value 3, this whole area of value. What do I do at this area of value? If I am prepared ahead of time, tomorrow morning price comes down here, I already know, don't look at it. And if I decide to look at it because I get itchy and I feel like trading because I didn't take enough trades last week, then it's a gamble and I take it. But I take it knowing that it is a gamble. But trading shouldn't be treated as a gamble, right? So this is something you can do if you're consistently profitable and you have a small amount, very, very small amount, not a regular full position. If you trade normally with 10 contracts, maybe you do 2 of these risky contracts. If you do normally, 50 contracts, maybe you might do 5 of these. I cannot decide for you what is a small amount. It depends on your account size, and it depends on how much of the gains from your previous trades you're willing to allocate to a gambling style positions. But for me, if I get 38.2% retracement, I'm excited, right? I'm ready to take this position if I see a good break of structure. That break of structure could come at a break of a trend line from that pullback, right? If that pullback happens here deep enough, it could be a very nice candle formation, a hammer, a pin, a doji, railroad tracks meaning 2 consecutive bars, one going down, one going up, equal bodies, and so the open and close of the 2 bars will create a doji if you had combined the time frame. So if it's on an hourly, if you look at a 2-hour bar, it becomes a doji. 1 hour down, 1 hour up, same size bars, it's a doji on a 2-hour time frame. So that's why I like railroad tracks. I call them railroad tracks because they just are 2 parallel lines. So if you get something like that, that's a good candlestick pattern formation. Yeah, you can take it. If you get some sort of chart pattern like a descending wedge, an ascending wedge, a flag, a pennant, anything like that you think, okay, this kind of formation indicates a trend reversal or a continuation, based on that is what you trade at. So if I see a trend line break at my area of value, 38%, 38.2, or 50% or 61.8%, somewhere in this zone, trend line break, railroad tracks, doji, hammer, boom, right? This is what you take. Or you get a morning star, any kind of candlestick that you like, but don't just chase after every candlestick. Be consistent with 2 or 3 that you like and stick with them. When you see those, you take those trades. So right now I'm waiting for my area of value. So this is why we're preparing today's discussion. Prepare for a very short week, Tuesday to Friday trading. And right now, the other thing to look at is the ES, because the ES tells us where the markets want to open. And if we look at even the 1 hour is fine. We have a trend line in the ES. Now the ES is up 4 points from Friday's close. Not a big deal. It's really not a big deal. That's from Friday's close. It was up slightly higher, earlier. Not a big deal. It's just, for me, this is just a sign that, hey, we could continue to push price up before we collapse, because that divergence even in the ES is there. Right, price is continuing to move up while the oscillator is flat or slightly downwards. So this is again something that we want to carefully look at. So real quick, just the cues. Again, looking at an area of value where we look at trend lines on a daily chart. We look at possible trend lines. So there were some trend lines that are broken. We're at the upper side of that trend line. Are there other trend lines that we can draw from this angle? This one is already there. Do I like to draw a different trend line, maybe one that aligns with this? It all depends on what you want to do, how you want. I don't like to draw too many trend lines. If I have seen one, I stick to it. If I like it, fine. If I don't like it, then I don't trade that particular ticker. I have to like what I see. Here we have what appears to be a trend line that was broken, but if you redraw it, it's a new trend line. So could this be your area of value? I don't know. I haven't done a lot of analysis on this to say, hey, is there on the hourly, is there a demand zone here with a confluence? Is there a Fibonacci retracement that I can look at again for that confluence? So there was no here. I'm looking at this. It was not deep enough, so I will continue here. And so that confluence for me, the 38.2% retracement, will come down here. It's way down here. And so that's past this trend line, but then we have this trend line. So maybe this is the longer trend line that is stronger. I'm kind of liking that trend line better. I don't like this trend line, so if I remove these drawings, maybe I'm liking this trend line that is coming down to the 50% retracement. This is what I mean. You prepare, you look at things and, hey, if I get this, I'm excited, I'm going to enter this. Right, somewhere between the 38.2 and the 50% retracement is what I like. Then you can take that position. It all comes down to preparing ahead. IWM is just playing in this range. For me, IWM is really range bound. So my IWM, you all know from my past videos, is my leading indicator. As my leading indicator, if I see a strong uptrend in IWM, everybody else is in an uptrend. But IWM has not decided to come out of this range. So this, because we're in an uptrend, it's starting to look like more of a distribution rather than a reaccumulation. It could be reaccumulation where price will break up, but when we look at SPYs and we have this divergence that I have mentioned, and IWM is in this consolidation phase, which is to me most likely a distribution, then we have room to the downside to go to. But for now, I don't have an area of value to trade from. If price comes down here, I might take it to the upside, but I have enough in the SPYs to play that yet. So IWM is not giving me what I want yet. I'm just looking at it, studying it for a little bit. And the diamonds, diamonds are in an uptrend, but it kind of looks like in a consolidative way that it's, pull back, up, pull back, up, pull back, up. So very slow movement. So I'm really not interested to look at the diamonds yet. Two reasons. One, I have not done enough studies. I am spending a lot of time on SPYs, which are giving me what I'm looking for. And two, right now this chart looks a little messy for me, and I'm not seeing an area of value that I want to focus on. If I do focus on an area of value, it would be here. I have some order blocks or demand zone here that I might consider and draw. I haven't drawn them, and then if I get some sort of a confluence, I might enter it. But I'm getting enough signals from the SPYs and very clean way. It's a very clean uptrend for me compared to the diamonds. It's an uptrend, but it's an uptrend that is looking like it wants to consolidate more than it wants to go up. So deeper pullbacks. So I prefer the SPYs. So this is what I'm looking at, and this is how I'm preparing for my day ahead. So if I get an entry at an area of value, I'm taking it. This one, most likely skipping it. Most likely skipping. Even though it's a good area of value, I'm most likely skipping it. If you can scalp, if you can monitor the charts, maybe you might take a quick $1, $2 move. I'm trying to show you how to swing these positions for greater gains and not have to spend a lot of time on the charts. Alright everyone, I know this has been a long video, but I really wanted to focus on the preparation for this short week ahead. Take care, and I'll see you in the next video.